Natural gas had a crazy day yesterday on Monday when prices dropped by more than 10 plus percent. This article is coming from oilprice.com. Natural gas plunges over 12% as extreme volatility continues. Forecast for milder weather and lower heating demand has seen the price of natural gas plummet by over 12% on Monday after a strong 5 week rally. The drop yesterday was the biggest since January 30th when natural gas plunged 14%. There have been some patches of extreme weather that led to a reduction in gas output in December and February. However, cold weather has not been a sustained pattern. The forecast now is for less severe temperatures than those anticipated on Friday when prices rallied. At the same time, stockpiles of natural gas reported by the EIA last Thursday showed they are currently 19% higher than their 5 year average, with that figure expected to increase further with this week's inventory report. Now, we've had a warm weather in the U.S., but it's also been a warm winter. Excuse me. We've had a warm winter in the U.S., but it's also been extremely warm in Europe. I believe in Rome itself, they had 2 months in which they did not have to use any natural gas to heat their homes. But what if all this changes in this upcoming winter or next winter, or the storage tanks in Europe are full? Um, they might be okay for this winter coming. Um, we transport a lot of our natural gas over to Europe. We have been doing that. That will continue. Um, but what if the weather just changes automatically in the coming year or couple of years? One way to play a rise in natural gas over the long term is the U.S. Natural Gas Fund ETF, ticker symbol UNG. And if you look at the monthly chart, we are trading at all-time lows. And that makes sense, right? Since the Shell Revolution, we have pumped out so much natural gas out of the ground that we have excess and no place for it to go. Okay, so are we at a bottom? I think we're near a bottom. I'm not going to say that the bottom was put in a couple of weeks ago, towards the end of February. I think price, looking at the monthly chart, can easily double and get up to the $20 level over time. Let's go to the weekly chart. This green candle was last week, right? We had a gap up. And this doji candle is the current week. We had a gap down. So are we forming a bottom? Is this the low? I would say that we are in the process of forming a bottom. And that confirmation would be if we had a double bottom. Even if prices breach the recent bottom, that will potentially show negative divergence if you look at a relative strength indicator. hope for a decline in price before prices move up higher. Because I think folks missed out on this pump. And if price can retrace, not only would it validate a bottom, but it would get in folks that missed this pump. So this is what I'm anticipating happening over the coming months, weeks. But longer term, I'm going to have a first target at 14, which would be the gap fill. And then a second target at 20. And this type of trade would be a position trade, a longer time frame trade. We're talking minimum 6 months to 2-year time frame. So let's just see how things pan out. I might take a stab at this through the options market, buy long dated calls, sell short dated calls against my long dated calls. But I'm first going to look for price to retrace, form a double bottom before moving higher. Until next time.